UPI money trap nobody talks about. You're losing money on UPI right now. Not tomorrow, not eventually, right now. And here's the thing, you have no idea it's happening. Every single day you tap, you pay, you move on. The transaction clears in seconds. It feels frictionless, it feels safe. But that speed, that convenience, it's carefully engineered to drain your bank account in ways UPI companies don't want you to understand. In this video, we're breaking down the UPI money trap that's costing Indians over 50,000 crores annually and showing you exactly how to stop it. Section 1. The Speed Paradox. Let me ask you something. How many times this month have you sent money via UPI? Try to remember a single transaction. Go ahead, think. Most people can't. Because there's no friction. With cash, you feel the weight leaving your hand. With cards, there's a signature, a receipt, a moment of pause. But UPI, it's designed to be invisible. Tap, done, next transaction, and that's by design. Studies show that removing friction from transactions triggers dopamine release, the same chemical that creates gambling addiction. Researchers call it the pleasure of ease. Here's what that means practically. A person using cash overspends by an average of $500 per month. A person using cards, $1,200 per month. A person using UPI, $4,000 per month. That's an 800% increase in spending just by removing the friction of cash. One study tracked 1,000 UPI users in Mumbai for 6 months. Their average monthly spending increased by 3,200 after switching to UPI from cards. Extrapolate that across India's 400+ million UPI users. We're talking about 50,000 plus crores that didn't need to be spent. Money that could have been invested, saved, or actually lived on. But wait, there's another layer to this trap, and it's not about your spending habits. Section 2, the data extraction machine. Every transaction on UPI tells a story, not just about money moving, about you. When you send 500 to your regular chaiwala at 7:45 a.m., that's location data, behavioral pattern, and income level all in one transaction. When you split a bill at a fancy restaurant at 9 p.m. on a Saturday, UPI logs your social circle, dining preferences, and disposable income. When you pay your insurance premium on the 5th of every month, payment platforms know your exact financial commitments. Payment apps aren't just processing transactions. They're building a detailed financial profile of your entire life. And here's where it gets dangerous. They're selling this data. Insurance companies buy this data to adjust your premium. Someone who buys alcohol regularly, higher health insurance. Someone who frequents gyms, lower premium. Lending platforms buy it to target predatory loans. If they see you're desperate, making small, frequent payments to different people, they target you with high-interest, quick loans. Advertisers buy it to follow your spending patterns. If they see you searching for wedding planners and then buying from wedding vendors, they know exactly when and how to pitch you. All of this happens without explicit consent. You've agreed to this, buried in 47 pages of terms and conditions that nobody reads, and the fine print gets finer every year. In 2023, Google Pay updated their privacy policy. Buried in the updates, permission to use your transaction data for product improvement and personalization. Translation, building profiles to sell to third parties. But data extraction is just the beginning, because data gets breached. In 2022, a bug exposed transaction details of 5.5 lakh Google Pay users. Names, amounts, timestamps, everything. In 2023, PhonePe's database was allegedly accessed, exposing merchant payment details. Your transaction history, who you paid, how much, when, all of it is vulnerable to exposure that could be used for social engineering, blackmail, or financial fraud. Section 3, the settlement game. Here's something most people don't even think about. When you send money via UPI, it doesn't actually arrive instantly. Not to the merchant anyway. That instant confirmation you get, that's just your bank telling you it's been deducted from your account. The money itself, it's being held. For merchants on platforms like Zomato, Swiggy, or Amazon, payment settlement can take 2 to 3 days. Some merchants wait up to 7 days. During that time, who's holding the money? Payment aggregators and platform companies. And where does that money sit? In interest-earning accounts. Let's do the math. If Zomato alone processes 500 crores in orders daily and holds that money for an average of 2 days, That's 1,000 crores sitting in their accounts at any given time. At a conservative 4% interest rate in a money market fund, that's 40 crores in annual interest, generated from your money. And Zomato doesn't share a single rupee of that with users or merchants. Multiply this across PayTM, PhonePe, Google Pay, Amazon Pay, and a dozen other platforms. We're talking about tens of thousands of crores in interest being earned on your money without compensation. It's the ultimate hidden tax. And when merchants complain, they're told it's a processing fee or settlement reserve requirement. It's anything but transparent. Section 4, the invisible costs. Let's add it up. Increased impulse spending due to frictionless transactions, 48,000 per year. Data being sold without compensation, priceless, but real costs in the form of targeted predatory lending and higher insurance premiums. Estimate 8,000 to 12,000 per year. Interest earnings lost to settlement delays, 200 to 400 per year, but aggregated across India, 50,000 plus crores annually. Processing fees hidden in transaction costs, 1,200 to 2,000 per year. Total hidden cost per person, around 60,000 plus annually. For a family of 4, 2,000, 40,000 per year. In 10 years, 24,000 lost to this system. Section 5, how to break the trap. So how do you escape this trap? You can't avoid UPI entirely. It's the backbone of modern Indian payments. But you can be intentional about it. Strategy 1, the friction return. Use UPI for bills, subscriptions, and planned expenses only. For discretionary spending, use cash. Yes, actual cash. That friction, the weight of notes leaving your hand, is a feature, not a bug. It reduces impulse spending by 60 to 70%. Budget, 5,000 cash per month for discretionary spending. Stick to it. The moment the cash runs out, no more spending. Strategy 2, data protection. Check what data you're sharing. Go into your Google Pay settings, PhonePe settings, Amazon Pay settings. Turn off location tracking, transaction history for third parties, marketing communications, permission to use data for product improvement. It won't stop everything, but it restricts what gets collected in the first place. Strategy 3, settlement awareness. For business owners and regular merchants, negotiate settlement timelines. A business processing 20 lakhs monthly can push for same-day settlement. That 40,000 they lose to interest delays every month, that's real income you should fight for. For regular users, keep track of refunds. If something gets returned, follow up immediately. Money being processed for settlement shouldn't be held from you. Strategy 4, alternative payments. This is controversial, but hear me out. Rotate payment methods. Use cards for some purchases, cashback, UPI for bills, wallet for subscriptions. Diversifying prevents any single platform from building a complete financial profile of you. It also means no single breach can expose your entire financial history. Strategy 5, the Real Protection Monitor your credit report quarterly, free, no cost. Just visit Sybil.com or Experian.co.in. If your data has been breached and sold to loan sharks, they'll start opening accounts in your name. Catching this early saves you from years of fraud recovery. Section 6, the bigger picture. Here's what's really infuriating. The RBI knows this. The Reserve Bank has issued guidelines on data protection, on settlement timelines, on transaction fraud. But enforcement? It's weak. Payment companies get fined 1 to 5 crores for massive breaches. For companies processing billions daily, that's the equivalent of a parking ticket. Until there's real regulation, real penalties, this extraction continues. But you can't wait for the government to protect you. You need to protect yourself. Because in the world of digital payments, convenience is a feature, but it's also a trap. And the worst part? Most people don't even know they're trapped. If this video helped you understand the real cost of UPI convenience, drop a like and hit subscribe, because next week we're breaking down the credit card conspiracy that banks don't want you to know about. Stay smart with your money.